Once again, hello, good evening, everyone, and welcome to another episode of the Property Show Live presented by Dream Valley Realty. My name is Sabbir Khan. I'm the broker of record for Dream Valley Realty, as well as your host for today's show. Thank you for taking the time to join us, whether you're online watching us live on Facebook, YouTube, or LinkedIn. We truly appreciate your time being here. Our goal with the Property Show Live is simple: to bring you trusted professionals and practical information that helps you make informed real estate decisions. Every week, we invite experts from different industries to share their knowledge, answer your questions, and help you better understand many aspects of homeownership. Tonight, we're discussing a topic that affects every homeowner, yet it's often overlooked until something unexpected happens. Our topic is home insurance secrets every homeowner should know. Many people purchase home insurance because it's required by their lender, but few truly understand what their policy covers, what it doesn't cover, and how to make sure they're properly protected. Whether you're buying your first home, renewing your insurance, or already own multiple properties, tonight's discussion will provide invaluable insights that could save you time, money, and stress in the future. I'm very pleased to welcome our special guest this evening, Ryan Arcuri, a commercial insurance broker at Think Insurance. I'm going to put him on stage and let me introduce him in proper way. Hi, Ryan.
Hey, Sabbir. Thanks for having me.
You're very welcome, Ryan, and thanks for giving us your time. Ryan has extensive experience helping homeowners, landlords, and businesses find the right insurance solution. And tonight, he will be sharing practical advice, common mistakes, common mixes that you need to avoid, and tips every homeowner should know.
Absolutely.
Ryan, once again, thank you for joining us. We're excited to have you on the show.
Of course. Thanks for having me, Sabbir. Pleasure to be here, and I'm excited to watch the live and all the other lives that you're putting together. I know a lot of work goes into this, so I'm pleased that you have me, and I'm going to try my best to share what I know with the audience so they can make better informed real estate decisions.
Thank you, Ryan. Before we begin, I would like to encourage everyone watching this show live. If you have any questions about home ownership, home insurance, and home ownership to protecting your investment, please leave them in the comments. We'll answer as many questions as we can throughout the show. So without any delay, I would like to ask Ryan, welcome to the show once again. Could you start by telling our viewers a little bit about yourself, your background, and what inspired you to pursue a career in the insurance industry overall?
Yeah, of course. So I started insurance right out of high school in June. Well, I started in life insurance and living benefits, and that was a kind of a tough gig. And then a year after I started, I got in an automobile accident. So I started working with Desjardins, and my insurance agent, my family's insurance agent, was State Farm. So when I got in an accident, we got talking, and then a couple months went down, and then I ended up joining the State Farm team when they were still State Farm, and I guess they're Desjardins now. That was June 2016, and then I had a little bit of success there. Even being the young 18-year-old that I was, we went from bottom 3 in insurance to top 3 in our district, and then I got cocky, became an insurance broker for 2 years, and then I went in 2020, so 2 years after that. I was at Think Insure in August, and I've been there 6 years, and I just celebrated my 10th year in the insurance business. And I've been doing commercial, primarily focused the last, I want to say 4 years, and about 70% of my business comes from the commercial, but we do a lot of volume, so I've seen a lot. Well, as much, I'm still learning, of course, but I've seen a lot, and we're still always learning, and I'm just trying to help however we can, and the rest is history.
That's fantastic. I think, Ryan, I know you from the beginning of your journey because you helped me through a lot of insurance policies as well. Uh, Also, many clients, you walk them through the process, and you are doing great. I always encourage people. You start at the right age. You already know how to, go around and get the best insurance. And I have worked with many, and you are really, really good at this. Thank you for sharing those story with us. Now, another question that typically I ask about the difference between because you are also doing the commercial and residential both. So, what is the main difference between the personal insurance and commercial insurance? If you can a little bit explain for our viewers.
Yeah, of course. So, namely, I do property and casualty or property and liability insurance. So essentially, we're insuring your property, whether it's personal property, business property, etc. We're insuring fundamentally property and your liability. So if you take an automobile, we're insuring the property's portion, so your actual vehicle, and then the liability portion is any negligence or responsibility you have for driving that automobile. So if you cause damage to other property while you're driving, or any liability that arises like bodily injury while driving the automobile, it's all the same logic. So same thing with home insurance. We're insuring the actual property along with your contents, your furniture, your couches, your jewelry, your collectibles, your watercrafts, you name it, along with the liability, which a lot of people don't know, but there's still the liability attached to the homeowners side, which really makes up a lot of the negligence that you can have, whether inside your home or outside of the home. But and then in terms of the difference between personal and commercial, it's all the same logic. We're insuring your property and your liability. So your business will have liability, whatever the nature of your operations are, whether you're a professional or a general contractor, a home builder, whatever it is. You always have certain liabilities that need to be taken care of, or responsibilities that can arise out of your operations. And then we insure what the easy stuff, right? Like your business property, your commercial automobiles, your tools, your equipment, your stock, your inventory, your business contents, your renovations to your building, etc. Right? So it's very similar, just a little added layer on top, if you will.
So if it says somebody running a business from home, or is that something a mix of home, like commercial?
Absolutely.
And home? Okay.
Absolutely. Well, yeah, it depends. There's a home-based business, right? So the a home insurance policy will cover liability, so they'll always typically be offered 1 or 2 million liability. But if you read the policy wording in the liability, it covers your negligence anywhere in the world. So if you're responsible, if you have say you have a son and they're playing hockey and they damage the neighbor's window, or you have a dog and it bites someone, there's a liability that covers, but it excludes business operations. So if you have a business running from the house, you'll want to, and that's something you obviously want to talk to your insurance broker about, but they'll exclude that set of operations. So you want to add your home-based business for whatever the operation is. And the insurance company just wants to know about it, be aware of it, so they can price it properly or tell you to go elsewhere and get a proper liability policy. And mind you, if it is within the home-based business appetite for the insurance companies, it's usually rather quite cheap and comprehensive coverage, if you will.
Great. I have not personally faced this, but sometimes I've seen insurance can actually cause a delay for the real estate closing. That happens sometimes. I personally haven't really faced that in my real estate journey, but I heard that can happen. So what are the most common insurance related issues that can cause a delay for the real estate closing?
Well, number one, we try not to have delays. It's our job, right, to make sure you have a smooth closing, just as you do. But the biggest thing is, as long as you're doing things proactively and you're not waiting till last minute, and you have open communication with your broker, your real estate and your insurance broker and your mortgage brokers, you should be fine. Like, there's not many things that will delay the close, or that will stop your close, rather. In terms of delays, the big ones that I would come to the top of my head is, one, if you're dealing with a private lender only, that could delay the close. And then the big one is if there's anything that comes up on the inspection, namely if there's high risk electrical or high risk plumbing to your home. So in terms of high risk plumbing, you'll have like Kitech plumbing that was, I believe it was the late 90s that they started using it, but it was for the water intake. So the water comes out of the hot water tank, and then it goes to your toilets, your faucet, etc. It wasn't very reliable. It was only used for about 10 or 15 years or so. And if you have that sort of plumbing, and then the other one being cast iron, which was, I believe, from the 1920s to 1960s homes, some of them had cast iron plumbing, and they were good at first, but due to the age and when they oxidized, they corroded, and water escaped, and it caused flooding or water escape, pipes bursting, seepage and leakage and all that. So the insurance companies noticed that, and they proactively said, we don't want to insure this type of plumbing. So either get it fixed or go to a non-standard or high risk home insurance. And then in terms of delay, it's never that we can't insure it. It's always just you're going to pay more and have arguably less coverage. And then same thing with electrical. There's a bunch of non-standard, but then electrical, if you have knob and tube electrical, which was early 1900s to 1940s, 1950s, same thing. They didn't have grounding wires, and they became brittle over time, and they caused electrical fires. Same with aluminum, which was probably more recent, especially I believe in the 1960s to late 70s, they used aluminum wiring, and when those oxidized, the connections became loose, and those caused fires. And the insurance companies are covering these things, right? So they obviously don't want to have a claim that your whole house is going to burn down, or there's going to be flooding in your entire house. So they'll either restrict coverage, meaning we're not going to pay out a loss we're not going to pay out any water damage claims or losses if you have this type of plumbing or electrical. Or you can go to a non-standard home insurance, which will have significantly less coverage for more money. Or you can get it fixed, right? So those are kind of the big things. And like I said, there's few and far between things that will actually delay your close, because for the majority of time, it's all standard stuff, and we've seen it before, and there's stuff you can do to be proactive, but it's always, as long as you're dealing with it time in advance, there's time to kind of negotiate.
I think you already answered a few of my questions I already had in mind, which is great. But I do understand, the current market with the real estate is different than compared to 2021, 2022. We had a very busy market then. And probably we're facing the slowest real estate market in the last 10 years or so. Now, before, when it was a busy market, we never had an opportunity to put a condition for a home inspection or any condition for the finance. So we just blindly went for any property.
Yeah.
Client just wanted it, and with so much competition, so we wanted to make sure that we secure the property. Nowadays, we have more opportunity to put all kind of condition we want. But for the purchase property, if they didn't have a condition, and sometimes we have no idea what kind of wiring it has, what kind of plumbing it has. All we can is get information based on the, some history on the MLS system. So we have to answer those questions to the insurance broker in order to get the quotation. How do we go about this? Sometimes it's very challenging to find those information.
Yeah, and without trying to sound too much like an insurance broker here, it is your responsibility as a homeowner to know what you're buying and know what you're getting into, and the insurance companies absolutely need to know what they're insuring. So they're definitely okay with estimates, and especially in terms of the age, like how old your wiring was or when it got replaced. And we'll ask these kind of questions, right? Or how old is your roof, or how old is your water tank? And estimates are okay, but they do need to know what type of roof it is, what they're insuring, how many, and we have some sort of record on the property, so we can do our best to find it and using our best educated guess. Whereas if it's a newer build, we would know it's been built to code, assuming it's a standard home and it wasn't a custom home, which we got to be a little bit more cautious. But assuming it was built in the last 20 years and built to code, we could feel a little bit more comfortable. But if the house was built in the 60s, then we're going to want to know when it was last renovated, and the insurance companies are going to want to know, because it can lead to catastrophic losses, right? So it's 90% of the homes are 99% of the homes are good, but they still want to know, and it's your responsibility as a homeowner to find out and do your diligence to know those sort of things.
I just want to make sure, let's say, for example, there's some errors on the providing information to begin with, and instead of say, client probably find out, okay, it had the either Kitec plumbing or cast iron plumbing. One of the information was provided, wrongfully, whatever information that they had, and between this ownership transfer and once they got into the property, there's the occurrence happen. So what happens when the insurance company finds out, okay, you know what, you said it's Kitec, but it was something else, whatever, but how does it impact the homeowner in that case?
Yeah, well, the insurance company, if they get, say you disclose that it had copper and plastic plumbing, which the insurance companies are expected to have, and it ends up having cast iron plumbing, say it was an older home, and you inform them, the insurance company likely would send out a cancellation letter and get off risk within 30 days. So they would send out a registered letter for cancellation, or they would work with you and say, hey, get this fixed within 30 days or we're going to get off risk, or this, that, and the other. Like, they'll have underwriting guidelines or questions that they'll have. And if it doesn't meet their guidelines, they'll 9 times out of 10 get off risk or apply conditions. And it's namely at the discretion of the underwriter, who works on behalf of the insurance company.
But in case something happens in between, before they find out, okay, it's not Kitec, it's cast iron, whatever it is, if there's the incident happens in between.
Sure.
So are they going to be covered, or are they going to have a problem?
Well, hindsight is 20/20, right? So it's and I've seen cases go both ways, right? I've seen underwriting guidelines specifically say, if you have this, coverage is null and void. If you have this, coverage is null and void. If the home is vacant for over 30 days, coverage is null and void. And then we advocate for our insureds, and sometimes it gets covered. Other times they're very firm that this is what it is. So it's a
50-50 chance, I guess.
And in this business, when it's your biggest asset, I really don't advise anyone to leave that up to chance, realistically. But I have seen it go both ways. I have seen there be some goodwill on behalf of the insurance companies, and they pay out a claim that's clearly states that we're not going to pay out a claim if you have this. So what can I advise in that situation? Are they going to pay out a claim? Possibly, but I would never advise risking that. Genuinely. So
I think what I understand from your advice is best thing to do, get the as best possible information possible before purchasing or before getting the quotation for the insurance.
Absolutely.
And obviously in current market, we have opportunity to do a home inspection. It's connected, is related, because home inspection report has full details of all those basic questionnaires requires to answer for the home insurance, basically. Thank you for explaining this in detail. I really appreciate that. And next questionnaire that I have, said that there's a lot of places that have wood burning fireplaces and stoves.
Yes.
Often requires a wet certificate.
Yeah.
If you can explain this, what it is and why is it important?
So the wet certificate, it's namely for wood burning stoves, and what I mean by a wood burning stove, it's namely for homes that have a fireplace that heats your actual home. So not necessarily for fireplace inserts or those gas fireplaces that are namely for show. It would be for gas fireplaces that have HVAC or flute chimneys that actually provide heat to your dwelling or to your home. So what the wet certificate is, it's a wood energy technology transfer. So when you have a fireplace, when you get them cleaned, when you get your chimneys cleaned, they'll send a certified technician to clean and inspect your fireplace, and they'll give you a wet certificate saying everything's compliant, and up to code. And the insurance companies have no problem insuring these things as long as they're compliant and done properly. Sometimes we've seen that they're not built to code and they don't have enough clearance, and they'll say, hey, we don't want to insure this, so either get it fixed or seal the chimney off so that it's not there, and send us pictures that it's sealed off, which has happened before. But namely, the insurance company's okay. There's a slight surcharge on the home, meaning it's slightly higher risk to insure these homes because they could burn down the house if they're not properly used, especially if you're using them more. But they just want a wet certificate, and the seller should be able to provide this to you, assuming they've had their chimney clean within the last couple years. And they'll get a wet certificate, and it'll show that it's compliant. And then if it's not, it's something that has to be dealt with. Like I said, either sealed off or fixed, and ideally prior to close, so you don't have to go to a non-standard or high-risk insurance company and go to your regular all-risk standard Canadian insurance company.
So Ryan, so what I understand is from this, if I come to you, say, hey, I have a client closing on such and such date, they need a home insurance, need a quotation. So fireplace, that has to be informed as well.
Absolutely. Well, we'll ask for the heating. How do you heat your home, right? So is it natural gas? Do you have any secondary sources of heating? And if it is a fireplace, which is common, we'll insure it, but we just want to confirm that it's compliant, it's safe, and we have no issues insuring it without going to non-standard insurance company.
Because many houses that built in 60s and 50s, they still have a HVAC system, heating system, but they have a fireplace and chimney. It still exists, but that should not be a major concern as far as the insurance, I guess.
No, it's not. It's not. The insurance company wants to know about it, but it's not. It's just like anything. They want to know what they're getting themselves into, and they're going to want to know, is this house going to burn down, and are we going to have to pay out $500,000 or $1 million rebuilding this house? And they just want to make sure everything's safe and compliant, and do their best to guide you to make sure your house doesn't burn down, right? So
absolutely.
Yeah.
Well, thank you for answering that. It's really helpful to understand and very good information. Another question that I have related to vacant homes, although we don't see that in much more since CDS started the vacant tax with all the houses.
Yeah.
But before this started, we used to see a lot of vacant houses. But in case of any vacant houses, what insurance considerations should be known to the buyer that they have to keep in mind when they're purchasing a vacant home?
Well, yes, exactly. So vacancy would apply to one, it's being you're renting it out, or it's an income property. But they would want to know why it's vacant, right? So are you renting it out? Are you looking for a tenant? And they would across the board, 30 days is their magic number, as long as it's not vacant for 30 days. But more often than not, you'd be moving into the home, assuming it's your primary residence. So it would be concerned with a rental property, or if you're planning to do extensive cosmetic or structural renovations to the home and it's vacant. So in terms of the considerations, and I have my own opinions on this, but the insurance companies, they don't like vacant dwellings. And I've seen claims from vacancy, and especially in the winter, people turn their heating off and the pipes burst, and that's probably the biggest reason. But it's they want to know if it appears vacant, like, are people going to be breaking into the home? Are they going to vandalize? Because the insurance company is covering all this stuff, so they want to make sure that
they worry about the liability. Of course,
they want to make sure they're not paying out a claim, right? And namely, is it? And then when it is vacant, are you checking up on it every 72 hours? What's the purpose of it being vacant? And then it just breeds a whole another slew of questions. And the insurance companies will insure anything as long as you pay the right price, but they'll inherently limit coverage, saying we're not going to pay out vandalism claims, or we might limit the water damage coverage, or we might enact a warranty saying that it has to be heated, right? So they want to work with you, because at the end of the day, it's their bottom dollar on the line, right? So they want to make sure that everything is going smoothly, and they're not going to have to.
And what if somebody goes for extensive vacation? I mean, going out for 6 months. I've seen people does that sometime, or
Yeah, well, they would, which happens, absolutely. They would add a vacancy endorsement, and they would give you a list of number one, your premium would likely double or triple, and they would give you
just
less
for that period of time, basically.
For that period of time, and they would take the vacancy endorsement or the vacancy change off.
Mm-hmm.
But it does happen. It's never ideal, but then they'd also work with you to enact some kind of safe measures, meaning if you're going to turn the heating off, we're going to make sure that the water is drained, or ideally have someone check up on it every week, or ideally 72 hours. But the insurance companies will work with you. They're each slightly different, but all by the same principles.
Nowadays, there's a lot of smart devices you can add, like control heating, and in case of flood sensor and all this kind of things.
Absolutely.
I think those things helps a lot.
Hence why they'll give you discounts for those sort of things, right?
Devices.
And
thank
the
you,
risk
Ryan.
is, absolutely.
Appreciate that answer. And in your experience so far, I know your journey is a few years, but what is the most you have seen, the biggest insurance mistakes the first-time home buyers make? I'm sure you have seen.
Yeah, I saw the. I genuinely think they're quite prudent individuals. In my experience, everyone is quite prudent. In terms of mistakes, it's realistically just waiting till last minute, not seeking proper advice, whether it's insurance or mortgage or this and that. It's doing everything last minute and not giving yourself, especially if you're new, if you're seasoned and you know what you're getting into, you kind of afford to wait till last minute. But especially when you're new, if you're a first-time home buyer or whatever it is, you just want to make sure you're doing things months in advance, or if not even months, at least weeks in advance, because usually the closes are, help me here, with at least 30 days in advance, 90 days in advance in most cases, right? So as long as you're kind of doing things proactively, it's never really an issue. But it's especially with standard homes or condos. But when you get to older homes or possibly rural properties, you could run into, I don't want to say run into issues, but less than ideal situations, right? Where you might, again, have to go to those non-standard companies, or might have to do things prior to getting insurance, or at least the insurance policy you were hoping for.
This also gives you the opportunity to shop around and get the best rate too.
Absolutely, as opposed to being forced to kind of, this is the first company that'll jump at insuring you. We have time to kind of figure things out. But in terms of mistakes, most people are prudent. Most of the risks are standard. When there are unstandard things, we deal with them accordingly. So it's and then we might need documentation or this and that, or something to be fixed, or someone to come in and fix something. So the real issue here is just not doing things in advance and not giving the professionals you're working with enough time to actually fix those mistakes or whatever it is, right?
Thank you, Ryan. Now, Ryan, nowadays we have a lot of homeowners, they become landlords as well, and they're investors. So if you can briefly let our viewers know the difference between rental property insurance and homeowner insurance. What is the basic difference on these two?
Yeah. In terms of there's a few smaller differences, right? Where the rental property, the insurance companies will insure rental income. And then your home insurance, they'll insure additional living expenses, meaning if there's a claim, the insurance company will insure your rental income, or if there's a claim against your principal residence, they'll afford you a place to stay, whether it's an Airbnb or a hotel. So there's small differences in the coverages, and small differences, if you will. But in terms of the actual coverage, it's the rental properties, they're sometimes more trickier. Like there's more things to be cautious of, because when it's an income property, you're not using it to live. There's vacancies that'll happen. Tenants are moving in and out. There's renovations because people will try to either flip the property or and renovations. The insurance companies just want to know what they're kind of getting into so they can insure everything correctly. And then, but namely, if you have a principal residence and you're bundling, if you will, with your home insurance, you're still afforded an all risk policy coverage. So the perils or the insured events that are covered, they're still solid for the most part, meaning it covers everything except the following exclusions. So there's still good and then there's other considerations that you have to kind of be advised of, but all in all, they're very similar. It's just with rental properties, there's a lot more variables, if you will. You could have two or more unrelated tenants, which the insurance companies kind of across the board don't really like, or if there's rooming houses, or if there's Airbnb over 180 days and you're not living there. If you're living there, they're usually okay Airbnb it the whole time. But there's just a lot more variables that need to be taken into consideration, essentially, right? When there's an income producing property, and the premium is typically higher for the same, but all in all, it's still the same policy. They're all risk policies. They cover direct physical loss or damage subject to the exclusions, assuming it meets that I keep saying our standard markets or our Canadian insurance companies without going to a high risk home insurance company.
Right. So, so how the homeowner gonna actually decide, should they go for the high risk policy or the named perils policy?
Yes.
For them, it's sometimes very, as a homeowner, most of the people doesn't know which one to go for, and how do they decide that?
Yeah. So in terms of how they decide it, unfortunately, which nobody likes to hear, including myself, it's some of the times it's just the best you're going to get, and you kind of have to make do with that. And insurance is very in favor of the consumer or the homeowner or whatever it is. Once you start getting to rental properties, then you can kind of they put a little bit more onus or responsibility on the landlord, which is kind of the same with commercial insurance. Their policy forms are less limiting or more limiting, so you kind of just need to take that into consideration, know what you're paying for, and budget for these issues. And instead of kind of leaving the insurance company to deal with everything, there's a little bit more in your hands to make sure that things don't go wrong. But when you do have to go to these non-standard home insurance, and they're typically on commercial broad forms as opposed to a personal all risk. So namely, the difference between those two is, and why I keep saying our standard markets or our Canadian markets, they insure against direct physical loss or damage subject to exclusion. So they're essentially insuring everything except this, and this. And this, and this is quite palatable, and it's easy to deal with. On the commercial broad forms or these named perils policies, they're essentially saying we're only insuring this, and this.
Yes.
So and they're significantly more limiting, right? So you kind of, it's as your onus as a buyer to know exactly what you're getting yourself into and read it more, as opposed to, oh, it's my principal residence, I have insurance, I have a good broker, everything's fine. It's more, you want to know what you're paying for, know what's covered, so you can kind of.
I think there's some major changes on the insurance as of July 1st too. I think it's more related to automobiles.
Auto
right?
insurance, absolutely.
Yeah,
absolutely.
Yeah, it is.
And
it is
mixed opinions, mostly from lawyers, in my opinion, or from what I've been seeing online, realistically. But it's in practice, there's not a lot of changes because everyone's opting to keep it the exact same, because they just want to. I don't want to everything was fine before. Well, let's leave it the same.
Yeah.
But in reality, it just gives you the option. So it's not mandatory, especially some of the coverages, they're just a one size fit all. Like they have, and I don't want to talk about auto insurance too much, but they have a non-earner benefit and an income replacement. You can really only choose one, whether you're employed or unemployed. So some people might, or a lost education expense. It's like, for somebody like me, it's me and my girlfriend, we're both done school. It's, why are we paying for lost education? Until we have kids, we can maybe re-review that. But it just gives you the option. And in reality, it's very cheap to remove this. You're not saving much, so people just kind of opt to keep it.
Now, I want to go back to one of this. I know you said about rooming housing.
Yes.
Because, you know, the city of Toronto actually allowing rooming housing up to certain, after a certain number of rooms. How the insurance company looks at that? Because when the city is allowing it, I know most of the insurance company doesn't allow the rooming housing. So is it changing or?
Well, it's the insurance companies. The standard companies won't insure the rooming houses. They'll go to a non-standard or commercial broad form, and it'll the same principles I said before. It's they're not offering guaranteed replacement costs, which the lenders don't like, which means the insurance companies guaranteeing to fix the home of similar make and construction quality, which would mean from the lender's perspective, which doesn't make sense to me, but they need to insure it for the value of the loan. So if you have $1 million home, even if the rebuild is $600,000, they'll want to see a $1 million limit, which a lot of the value is just embedded in the land. So I think the lenders are being unreasonable, but that's what they want. If there's no guaranteed building replacement cost. But other than that, you're typically on a commercial broad form. They see it as commercial operations. They're not all risk policies anymore. And you just have to know your risks, know what you're paying for, and deal with everything accordingly, unfortunately. So namely the key exclusions would be like vandalism by tenants. So they're not insuring tenant vandalism. They'll have more warranties, meaning you have to have a smoke detector in every room. They'll want stuff in the lease agreement saying there's no cooking inside the actual bedroom, and they'll want it in the actual designated kitchen area. So they'll have more restrictions and warranties. The water damage coverages are typically more restrictive. So it's not just we're kind of insuring any water damage related claim. They're a little bit more picky as to what water damage claims they're paying out. So for these operations, especially since the money can be good if it's done properly, but there's a lot of considerations that needs to be taken in to make sure you have a successful income property, essentially.
So no, that's actually really well explained. And one of the questions came out of my head. It's not on my list of questions, but I wanted to ask, maybe some viewers might have this kind of questions. Nowadays, a lot of people facing issues with the tenants, you know, that, although let's say if somebody has a rental insurance coverage and everything, and suddenly their tenants stop paying rent, whatever the reason they have. How that covers by insurance, or is there any opportunity or any options for that?
Well, the insurance covers direct physical loss or damage. So unfortunately, it's not physical loss.
There's an income loss. It's rental income.
It's an income loss, which realistically is physical, but it affects your physical pockets. But it's not direct physical loss or damage to the property. So they
don't cover that.
You got to be a prudent and unfortunately, I've seen a lot of very successful landlords that have very successful real estate portfolios, and I've seen some that have been an absolute nightmare and destroying their bottom dollar. So they can be done they can be very lucrative if they're done properly, compliantly, and
make the life a lot easier for the most.
Of course, it does, right?
Yeah.
Choosing your tenants wisely, making checking their references, their income, and all that stuff. But in terms, I don't want to say luck of the draw. There is some things you can do to mitigate it, but sometimes you can get a bad tenant. They can appear very good on paper, possibly
And
forging
unfortunately,
their
it happens a lot.
documents, or
Happens a lot.
sometimes these instances happen, right? So you have to be cautious and a prudent landlord to look out for these sort of things. But in terms of insurance, it's not an insured peril. There's no direct loss to the actual building. It's just the tenant is not paying, unfortunately.
Well, thank you for sharing that too. I'm going to move toward condominium a bit
Yeah.
because we have a lot of condo market is the probably best buying market right now.
Absolutely.
Prices dropped
Absolutely.
significantly. So a lot of condo buyers actually they assume that condo has a building insurance, which covers a lot of the building, and they assume that they might not require to have a homeowner insurance.
Yeah.
If you can
Seen
explain a
that.
bit for our
Yeah,
viewers.
I've seen that a lot, and it's funny because one of my friends who's a lawyer, he called me today explaining this exact situation, which is funny because a lot of this stuff ties in, but he calls me. There was a condominium, and it was an older condo. I'm not sure if it was a condo townhouse or whatever, but there was allegedly a wood fireplace in there that apparently it's in the bylaws or the condo declaration that they're not supposed to be using it, but it is what it is. And then he burnt down the property, or he burned down his unit, and then the neighboring property had water damage as a result from the firefighters coming in or putting out the fire. But in terms of why you need this insurance, and I've had a lot of people say it's, oh, my building has insurance, and anyway, in the condo declarations, and you'd have to read over your condo declarations because they're slightly different, but they're generally much of the same. You're technically an owner of the building, a shared owner of the actual building. You own your unit from the drywall in, but shared ownership of the actual building. In the declarations, if you cause the damage, they'll back charge the unit owner. So the most common one is if there's like water escape or water damage that damages the neighboring, usually the units below. They'll send you a bill for the cleanup or whatever it is, and then charge it back to the unit owners. And the last situation that happened, they had a cap of $20,000. Hence why condo insurance policies are typically cheap, because when these things happen, they're usually not catastrophic, meaning they're not $1 million to rebuild the house. They're usually capped at 20 or 50, whatever the condo deductible is or whatever's outlined in the condo declaration. So that's kind of the main thing, is you're going to be back charged for causing damage to the actual structure. So the insurance company will cover that, assuming it's a direct physical loss or damage. And then the second thing is loss assessment, which is loss assessment, meaning or special assessment coverage, or if the condo corporation issues a special assessment to their unit owners, and it's typically on older or much older buildings, and it's typically because the condo board hasn't reviewed and it's usually to smaller buildings, if you will, or just older in general. But if they're not insuring the actual structure to value, or they have a deductible that they can't pay, say they have a 20 or a 50 or $100,000 deductible before making a claim, which happens. It's normally 20, but it's at the condo board's discretion. If there's a claim and they can't pay it, they'll issue a special assessment to the unit owners, which you'll be expected to pay. So it'll cover that alongside your liability, which is just your $1 million or $2 million liability. It covers you anywhere in the world. If you're responsible for causing damage, if you have to pay compensatory damages because it was not your fault, there's liability. And then the more reasonable thing why everyone buys it or thinks they need it is because they want to insure their actual contents inside the house, like their furniture, their clothes, etc. And then any renovations that you did that are not standard from the actual condo, you'll have to insure that. And some people opt not to insure that, right? But the bigger thing is the back charging to the unit owners. That's probably the biggest claim that we see for condos, and it's almost always water. but and they're usually like 10, 15, 20,000. But
you mentioned something about loss assessment and the special assessment as well, right?
Yeah.
Yeah. But what happens to the entire building special assessment? Is there anything insurance does about that?
Well, they'll pay, the insurance will pay for it. They'll usually have it capped. It depends on the company, but it's usually capped at. It really depends on the company, but it's usually around the $175,000 mark. And it just is if the condo's insurance is insufficient to pay for it, the board will issue a special assessment to the unit owners, and the condo insurance will cover it. Absolutely. It's very rare. Those are very rare. Those are very rare, mind you. But when they do happen, they could tend to be.
So that is something. It's a great information. I think a lot of owner doesn't know. I didn't know as a condo owner when I was owning a condo. I didn't know that actually there's a coverage for that.
The buildings. I mean, assuming there's a good reserve fund and the building is not 100 years old.
Of course.
It's very unlikely to happen, but it happens, right?
It happens.
Yeah. It's very rare.
Now, if the condo owner rents out the property to a tenant, we generally advise we require tenant insurance, which tenant has to get. In that case, building insurance is there, tenant insurance is there. Is there a requirement for the owner insurance too at the same time? Is it required?
Yeah, the tenant insurance. I almost want to say it's the least. I don't want to say the least of your requirements, and if you're on a standard all risk form, it's probably the least of your requirements realistically, because. But then if you have vandalism by tenant, it's usually would be excluded on. And then if you realistically that if it was vandalism, their tenant policy wouldn't cover it because it was willful. It's not like they did it by accident. But it's more for the tenant's sake that they want to have their coverage, assuming your coverage is, and it kind of gives you an extra fail safe. Whereas if you're on, like I said, those named perils policies, if your tenant was responsible for causing the damage, you could claim under there. That being said, it's not always the tenant that does cause the damage. Sometimes a water tank just leaks or a washing machine just starts leaking. It's not their fault, right? Assuming it was kind of their fault, like they left the tap on, and your policy doesn't cover it because you had a named perils policy that had very bad water escape coverages, then it's an extra layer that can protect you. But more so it's more so for the actual tenant, because the insurance company can choose to subrogate or go after you for causing the damages. Like say you did leave a tap running, the insurance company might pay out the claim to the unit owner and then go after the tenant. And then if it's $15,000-$20,000, tenant's like, I'm going to go bankrupt, right? So I'm put on a payment plan. So it really is more so for the tenants realistically, especially that they have the liability. But it does add an extra layer for the landlord, and it's a very good practice to have, especially since you don't know everything and you don't have 10 years experience plus in the insurance business. It's always better to steer on the side of caution and mandate, especially how cheap it is, just to kind of mandate your tenants have their own policies.
It's always good to have that second layer of
course. And some companies will require it, but it really is, in my expertise, more for the actual tenant. It's always good there's more reasons to get it than not to have it, right?
No, of course, and it's not too expensive.
It's not. It's usually $300 to $400 a year, typically.
Yeah. Well, that's great to know. We all know that water damage is one of the probably leading cause of insurance claims. Most of the claims are. If you could explain briefly difference between the sewer backup, overland flooding, and water seepage coverage. These three, just for our viewers.
Yeah. So as I mentioned, the standard companies, the Canadian companies, they're on all risk policies subject to the exclusions. So there's namely 4 water damage coverages that are excluded. Your broker will always take you through these. It's very standard, but overland water is the big one. And the reason they don't insure that, in my opinion, is because it's catastrophic to the insurance companies. So if there's a contained river or body of water and it overflows, say you have a house next to, I think the last big claim was the Ottawa River flooding or the Ottawa Canal. Maybe it might have been over 5 years ago now, but a contained body of water overflowed. It was due to heavy rain, but it overflowed and it wiped these houses off their foundation. Catastrophic to the insurance companies. They'll make you pay extra to have that insured. Then you'll have sewer backup, which is if the sewer water backs up into your home. Those are generally smaller claims. And it usually is usually, not always, but it's usually limited to the basement, and they'll have someone come in, rip out the damaged flooring, put in fans so there's no mold, and then replace any of your contents. But those are usually smaller claims. Not always, but they're usually smaller claims seen as maintenance issues. And the insurance companies will insure that separately. Then there's seepage, if there's water seeping in through a crack in the foundation. And those you want to be cautious, because not every standard insurance company will even offer that realistically. So you do want to be cautious of that one. But they'll see it as a maintenance issue. Water's coming through a crack in the foundation and it's seeping in. It's not pouring in, but it's seeping in. So they're not going to cover the maintenance for the crack in the foundation, assuming it was lack of maintenance and it wasn't from an earthquake or something other like that. But they'll typically exclude that, and then they'll exclude above ground or surface water coverage. So if water comes in through a crack in the window, ice damming, meaning your attic isn't well insulated, so it heats up the water under. If it's snowing, it heats up the water under the snow, melts under the shingles, and then seeps into your roof. That's another maintenance issue, if you will. So even though they're excluded, they'll still offer to insure it separately, assuming you'll pay for it. But it could get quite pricey, especially on older homes. But the insurance companies they have good demographics based on your postal code, the geographic height and proximity to a river. So it's their bottom dollar at the end of the day. So they're pretty on top of pricing it accordingly. And realistically, when it's more expensive, you're more likely to have a claim, but it's something to be aware of and take a look at. And you can, the standard companies, they're good. They're good policies. I mean, as long as you know what you're paying for. Some people decide not to insure them, and that's fine. But as long as you know what you're paying for, it's you at the end of the day who's educated to make a decision like that, right?
And they should go through all the binders just to make sure what their coverage are. So we should know.
Make sure it's all option. It's all especially once. I'm not saying every year, but kind of have a good relationship with your broker and see if anything's changed. But at least when you're first buying your first property, I strongly advise to go through those documents and know what's covered, know what's not covered, know what to look out for, and it's pretty uniform year after year. And if there's any substantial changes, your broker should let you know. But read it over once, and then
absolutely
you'll see some notes on what you have to look out for.
Thank you, Ryan.
Yeah.
So we're almost toward the end. We have a few more minutes to go, but just a few more questions I have before we finish the show. What are some of the biggest misconceptions that homeowners have about the home insurance? Because everybody has the different way to look at it. If you can explain a little bit about that misconceptions.
Some misconceptions, yeah, that's a good question. Well, I mean, the biggest misconception is I thought this was covered, right? And it's and that's namely geared toward the commercial property broad forms, as opposed to your all risk policy, where it's like, I'm more like, oh, really? That's I feel like that sometimes shouldn't be covered, but that's namely covered. But in terms of misconceptions, I guess it really depends. I'm a little bit stumped with this one. I guess I'm too entrenched with insurance to I know with auto insurance, there's quite a few more misconceptions. With the home insurance,
Because I had a situation, one of my friends
yeah,
had
tell
that
me.
was like act of God. For the automobile, it wasn't some reason it wasn't part of it. And during the 2013, you remember we had that snowstorm, ice storm,
Yes, yes,
and one of the it was very bad luck of one of the tree actually on the street fell right on his car, brand new car,
yes, yes.
and it did not cover, although it has nothing to do with the home insurance, but it did not cover his car because he didn't have the act of God some reason. So is there something like that for home? What if a big tree falls into the house? I believe that's generally
That's
covered. Right?
that's direct physical loss or damage. That would be covered. And then when it comes to your named peril broad form, you have to specifically see that that's covered, right? So
Hmm.
like I said, on a Canadian domestic all risk policy, it would be covered. But you got to read your policy wording, right? I can say that, but there's some policy forms that, unless it specifically mentions it, it wouldn't be covered, right? If I could say maybe a misconception, it's more with auto insurance, realistically. If people have like golf clubs in the back or some sunglasses, they'll put a claim in because, say, someone broke into the window, they'll assume that it's covered under their car insurance policy. But the car is only their auto insurance policy is only covering the actual vehicle, and they'll have to put in two claims, one for their auto, one for their home insurance to kind of make up the shortfall. So it's
Okay. No,
yeah,
thank you.
yeah.
I guess home is a little bit different than cars because I wanted to have that question in case if there's something majorly we should be aware of. But I guess for the home side, there's not much to think about that.
There's a lot of nooks and stuff like that, but it's in terms of misconception, I just nothing comes to the top of my mind what's common knowledge that's really like oh, that's not actually how it works, right? There's not much that comes to my
All
I
right.
guess maybe another misconception actually would be in terms of at fault. A lot of people assume if a tree fell on their property, they're like, why is my insurance going up? It wasn't my fault.
Yeah.
It's not as regulated as auto insurance, unfortunately. The insurance company's like, oh, we paid out money. They can kind of raise it at their discretion. So that's maybe
I
probably
think
the
that's the
biggest
question
misconception.
everybody has, especially all Ontarians, I think, have
Is
that
my
question.
insurance gonna go? Is my insurance gonna go up if I put a claim in? Oh, it wasn't my fault. Why would it go up? Auto insurance is much more regulated. Home insurance, they'll likely still raise your rates, but at their discretion.
Thank you, Aran. We are almost uh, get to be done here in a couple of minutes. I'm finishing with one last question to wrap up. Top three advice for our homeowners, landlords, real estate investors,
Yeah,
and that you leave them to remember so that can something affect them
yeah,
and they can carry home with them. That'll be great.
yeah. So my top three advice is number one, get a good broker that you have an ongoing relationship with, and even if you think I'm a good broker, the reason me and you, Sabbir, we have a good relationship. You'll always ask me, oh, is it okay if I do this? What if I do this? Oh, so it's more have a good working relationship with your broker. Always ask them questions, especially if you're unsure, as opposed to kind of just get it done and figure it out, right? Like you'll need a good working relationship. The other thing is always just prepare and plan in advance, especially with your closing. It's kind of brings it back to the first point. It's instead of, oh, I need something done today, which is usually fine, but what if it's not, right? So always prepare, plan in advance, be a prudent property owner, read your wording. It's your livelihood, especially if it's your income property. You kind of want to make sure you're a good landlord. And then the third is be truthful and honest, because insurance companies can and will be ruthless. they could deny claims for. There's a lot that they can deny claims for, and if you're not reading the policy wording, the 160 pages of it, it's hard, right? So there's always stuff we can kind of work with, but it's you always just want to be honest, and that kind of goes back to having a good relationship with your broker so that we can
Thank you,
kind of
Ryan.
figure everything out.
If you don't mind, just share your phone number with the viewers in case they want to reach out to you about their insurance questions or if any idea. If you want to share it quickly.
Yeah, phone number, guys. I appreciate everyone tuning in. You can reach me by email, ryan@thinkinsure.ca, or my direct line is 647-519-2761.
Ryan, I really appreciate your time. I know you're a busy man, and after hours you're sitting with us. I really, really appreciate it. I'm looking forward with the next event, next show. We'll try to have you sometime over the next few months. Thank you so much. I will we'll talk later. Have a great evening, Ryan.
Yeah. Thanks, Sabbir.
So
appreciate you having me.
Thank you. Viewers, thank you so much for your time and spending the entire hour with us. I hope this was helpful for your insurance questions or any comments you had. We'll be looking for it. If you have any questions or anything that you haven't had the opportunity to ask us, please leave us a comment. We'll make sure that Ryan gets those questions and get it answered for us. And for the next as you know, every Thursday from 7 to 8 p.m. we have this live property show, and next week please tune in again to see the next guest we have next week. Thank you so much. Have a good evening. Take care, everyone.